All right. How you doing today?
Great, Eric.
Awesome. So you are the capital gains tax deferment expert, in my opinion, and I look forward to learning more about that in today's, conversation. So can you give me like let me tell you what I know about it, and then I'm going to let you explain in much greater detail what it actually is. So tax deferment is a 1031 exchange, has something to do with 1031 exchange, whereby if I sell real estate and I can defer the capital gains tax hit I take with the IRS for a certain period of time by putting that, I think I put that real estate into a trust somehow. So go ahead and tell us exactly how that all works.
Yeah, so your listeners might be familiar with a 1031 exchange, which has to do with investment real estate. That upon a sale of investment real estate, you can move it into like kind investment real estate within the 45 days to identify, 180 days to close, to defer the capital gains tax and depreciation recapture. That's known as a 1031 exchange. But the 1031 exchange has its limitations in that it doesn't work for any other asset or anything else. And so if you're selling a business or cryptocurrency, or LP or GP interest or captive insurance or anything that has substantial gains, it doesn't work for anything. It also doesn't work for short term, right? If you held it for less than 1 year. So the 1031 is very rigid. We like to call that blockbuster way of exit planning. It's you got to return the movie in 3 days. It's got you got to rewind the video, or the DVD is scratched, or it's just pretty in a box, right? Well,
Hmm.
what we offer is something called a deferred sales trust, known as like a DST, that allows you, like Netflix, to be any asset of any kind can defer tax that you're selling. Highly appreciated. It needs to have $1 million net proceeds, $1 million gain. And where you're selling your asset to a trust, and this trust is issuing you a promissory note to pay you back slowly over time. So that's the short answer. But yeah, it works for businesses, primary homes, can save a failed 1031. Works for cryptocurrency, public or private stock. Needs to be $1 million net proceeds, $1 million gain. That's how you qualify. Unless you have two assets at $500,000 each that you can
Hmm.
combine. So if you had Ethereum at 500,000 and you had commercial real estate property at 500, you can combine those two to make $1 million total, right? So that's called a deferred sales trust.
Very interesting. So I'm very excited, of course, that it works for cryptocurrency as well. But is so that capital, when when you put the property into, and it doesn't need to be an investment property, correct?
Right. So for the
It could be
deferred
a
sales
personal.
trust, it's Netflix. It can be a primary home. It can be
Mm,
investment property. It can be a business. It can be NFTs. It can be cryptocurrency. It could be stock. 1031, it must be an investment property. So
mm,
this is where
got
that
it.
1031 is like Blockbuster, but we're like Netflix because we can do any asset of any kind.
Neat. Okay, so when we put a property into this deferred sales trust, does it, how is that equity? I suppose it's locked up, and I think you said somehow you can drip it out over time. Is that correct?
Yeah. And so let's to talk about how and where the funds can be invested, and then what's the flexibility with the payments. And so the
Hmm.
funds can be invested into stocks, bonds, mutual funds, cryptocurrency, investment, real estate, businesses, ground up development, hard money lending. Really, it can be invested in any asset of any kind. Also, it has optimal timing. You can dollar cost average. You can put it at different times. You can sit it in the bank and T-bills making 5% while we wait for the crypto market to make sense, or the real estate market to make sense, or whatever your investment thesis is. We can design it around that. Um, in regards to payments, we can structure the payment typically pretty flexible too. Eric might sell $10 million worth of Ethereum and have a $3 million tax bill. And instead of paying $3 million, he moves all $10 million into the trust, gets a promissory note back, and takes interest payments from this trust. Typically, 10 million, let's say it was an 8% interest, it'd be $800,000 a year. He may or may not need that 800,000 a year. He might only need 700, 600. We can structure a little bit lower, but we actually did about 12.5 million of crypto exits. Ethereum and Bitcoin are the main two, where certain clients bought Bitcoin, for example, like 50,000 and went to 50 million when Bitcoin was 54,000 a coin. And instead of paying that huge tax in California, they were able to exit a big portion of that defer a large amount, about 1.85 million. They exited about 5 million on the first deal. And that was really powerful for them because they were able to exit at a high price that made sense for them. And then they could fund a business venture with the capital, all tax deferred, but they also get payments back to them. And as they get payments, they pay tax slowly over time, but most just take interest payments from the full 5 million on this scenario. Instead of having, let's say, 3 million after tax, they had about 5. And that's the beauty of this. If you just live off the interest, you'll pay tax, but the full 5 could be invested in different ventures, all tax deferred.
Wow, that is really interesting. Are you an attorney?
So my business partner is a tax attorney and a CPA. I think he's like
Okay.
the Elon Musk of tax. He's a genius. And so I just had a chance to study underneath him for about 10,000 hours for a number of years. And so with that, I'm not an attorney. My role is a trustee. We serve here at Capital Gains Tax, which is my company, as the group that helps to basically manage the trust and then help work with third parties to invest the funds. And then also with you if you're going to invest it with yourself and other deals.
Interesting. So do you draft up these deferred sale trusts, or do you do it under his like supervision, something like that?
The attorneys draft all the legal paperwork and they provide the audit defense and all of that. Yeah.
Okay. How long do these trusts last? I mean, are they for a defined period of time? Do they have to be a certain length?
It all depends. You can make it a year, 3 years, 5 years, 10 years. 10 years is typically what we like to see. And then every 10 years, you can renew for another period of time. Most go for 10 years. And at the end of 10 years, you can renew for 10 years. And then you can pass it on to children and children can continue to defer it, step into your shoes and you continue there. So, but it all just depends on what the client wants. But most like to do 10 years and just keep renewing it because they're deferring somewhere between 25 and 50% of their proceeds or their gain. They're deferring 100% of the capital gains tax typically. And sometimes it's like 25 to 50% of their total proceeds that they're going to receive. And so it's a big opportunity to use the law of compounding interest to keep the money working for you, kind of like an IRA or a 401k or kind of like a 1031 exchange.
Okay, interesting. I had another question. It escapes me. Just hold on a second. It'll come back to me. Oh, almost had it. What is the cost for these?
Yeah, so the cost
I imagine it varies.
It varies depending on the size of the deal, but let's just keep it simple. Let's say it was $1 million sale of Bitcoin, right? And you had a very low basis, so you're facing, let's say, $300,000 of tax, right? So that's the first thing. So you define that, and so the tax attorney charges a one-time fee of $15,000. My business partner, so it's a one-time fee, so 1.5% of that million. That covers lifetime audit defense. And then the trustee working with financial advisors and third-party commercial real estate operators and different groups, that's about 1.5 to 2% on a recurring basis on the million. So whatever net proceeds into the trust. So if you had closing costs and different things, so we make about 1.5 to 15 to 2% on a recurring basis. Now we typically return though about 7 to 9% net of those recurring fees. So let's say on $1 million, you can put it in there. We typically return about, let's just say 70, 80, $90,000 net of the recurring fees, right? So let's try to earn about 10, let's say to return 8, if that makes sense, Eric.
Sure. Well, what happens with these is I can't necessarily pay attention while you're talking. I'm catching a lot of what you're saying, but I'll go back and review is what I'm going to do. So this is good stuff. I'm going to tell you, this especially for people that are well, a lot of my audience is crypto investors. So we're going to be interested in this. Crypto is, as you know, it's a lot more volatile than real estate. So where does the capital go? Like, where does it's like if I sold a rental property and I was going to put it into this trust, where does that equity, that capital, where's it stored? Do I maintain control over that?
Yeah, so let's actually use the crypto exit because people probably want to know how that all goes down, right?
Yes.
And we'll do the real estate one too, but it all ends in the same place. It's in a trust bank account. So let's say it was Eric's, you were doing the trust, right? And you're getting it all set up for your deal. And let's say you lived in Silicon Valley. We could call it the Silicon Valley 2023 Trust. We make up a trust name, and this trust file gets its own EIN, and it opens up a bank account. We use very large banks, but it could even be a bank that you might use. And so we open up the bank account in the name of the trust. And then upon exiting the crypto, and we've used Kraken, has been our main one that we've used. The Kraken account is the name of the trust. We open up 2 accounts there, and the transfer from, let's say, Coinbase goes over to Kraken. And then from Kraken, it moves to the trust bank account, right? So just like you might transfer, the difference is the trust is establishing a new basis. And so let's say it was $10 million worth of Ethereum. We would transfer 10 million of Ethereum into the Kraken account. That is the trust bank account, and then the trust sells it for 10 million into cash, and then we exit the funds into the U.S. bank account. So that's where they go at first. Now, sometimes we have investment advisors like TD Ameritrade, Charles Schwab. TD has become Charles Schwab is one of them we use. Raymond James, Chase Bank. Other large banks to keep the money in very secure places that are reputable.
Very interesting. Are you familiar with the Puerto Rico Act 60?
I've heard of it, yeah. And so we like to say we're the strategy without having to move to Puerto Rico, without having to go overseas or doing anything that's potentially on the edge. Now, Puerto Rico Act 60 is not on the edge. It's totally legit. You just make sure you move there, you establish a business there, and have like the employee there, right? And all the stuff you're spending the 187 days, at least in there, having all of that legit. And you can get some really amazing capital gains tax and income tax treatment for different things. So yes, familiar, but definitely not an expert, Eric.
Okay. All right. Fair enough. What questions am I not, what am I missing? What questions am I not, should I be asking?
Hearing this for the first time. The first one is like, it seems too good to be true. Like a lot of people are very successful in investing in crypto or real estate or businesses, and they have these CPAs and these tax people that have helped them for many years. And they go, how have I not heard of this? Seems too good to be true. Just quickly, the legal track record is close to 30 years, thousands of closes, billions and billions and billions of assets have used it, over the years for sales. Again, crypto, stock, public stock from major Silicon Valley companies have used it for team members. Business sales, of course, commercial real estate, apartment complexes, car dealerships, GP, LP interest, captive insurance. It's worked flawlessly close to 30 years. When I say flawlessly, I mean it's been through the IRS audits, close to over 24 audits, state and federal. One of the largest deals, $100+ million deal in California. These are all no change, no finding audits, which is pretty remarkable, because if Eric or I or anyone else got a audit on our tax returns, we might have missed a receipt. We might have, misstated something, and we have to, pay a little more tax or whatever. There's going to be a change. There's been no changes, and these are tens of thousands of tax returns. So literally it's batting 1,000. It's like getting to the plate, and just hitting these home runs. However, it's proprietary, it's protected. Part of why we're batting 1,000 is we don't let it get out. And if it got out into the wrong hands and they abused it and they pushed it past the boundaries of which they have, which we'll talk about here in just a second, then it could fail. We don't want it to fail. So that's number one. Number two would be the control aspect. You mentioned a little bit before. So I'm a third-party unrelated trustee. You do have to give up some control, okay? But It's not unlike giving up control to a third-party qualified intermediary, or even if you have an IRA company, you have an IRA or 401k, you maybe giving up control to a custodian there. So understanding that you have to work with a third party to keep what's basically arm's length distance, because what you're doing is you're selling the asset in exchange for a promissory note. So you're becoming an owner of a note. And so you don't own the trust. If you own the trust, it'd be taxable. It's like just you sold it to yourself, right? Or if I was Eric's brother and he tried to do the trust and I'm a related trustee, it fails. And so you've got to work with a third-party unrelated trustee. That being said, there's controls in place like third-party financial advisors, third-party tax preparers, third-party tax law firm and CPA firm. We work with your CPA, and the funds go to groups that you approve, and you have to approve of the movement. You get 24/7 access to view the funds online. So just getting comfortable with that whole aspect, especially if you're coming from cryptocurrency. I invest in crypto, and it's like, gosh, there's a lot of scams out there. And this is all legit. We would all be in jail at this point with how many years we've been doing this. So it all works as long as you're working with those that know how to do this. The last one would be just, just making sure that it's an investment, not an expense, right? Because some people might hear those fees and go, man, it seems like it's a lot of fees. Well, it's a lot of tax too, but it's understanding how to make this investment, how to make the DST an investment, not an expense. And that's part of what we do as well by doing these what's called joint venture partnerships with the trust, establishing new bases, giving you additional upside beyond just the 7 to 9%, the way we structure it. So we have an internal way to structure these deals to make these not just tax deferral, but actually wealth building. And the biggest thing for cryptocurrency, if you're hearing this, right, is as crypto investors, we typically know when it's a very hot market, it's probably a pretty good time to sell, right? And then if we don't take action on that instinct, things can drop rapidly, and now we're in a tough spot. The DST gives you back the ability to make decisions with conviction on your timing, right? And so, for example, when we did another deal, it was an Ethereum sale. In fact, the Ethereum sale was the first cryptocurrency deal ever done with the Deferred Sales Trust. And this gentleman worked for a big tech company in Silicon Valley. He's very smart at what he does, and he's an early adopter into Ethereum. And he rode the wave from about $100,000 to like $6.5 million was the first wave, right? And he sat down with his wife during an anniversary. He's like, "Hey, I got something big to tell you." And she's like, "Whoa, what's going on?" He's like, "Well, I made an investment." And she's like, "Oh, okay. Well, what happened?" "Well, it's $6.5 million. She goes, "What is it?" And he goes, "It's a thing called Ethereum. It's cryptocurrency." She's like, "Sell it all." He's like, "Whoa, whoa, whoa." He's like, tell her, and he's like, "Sell it all. We can retire. We can retire." And they're both working, 50, 60-hour weeks. They have a couple kids, the dog, they're in the Bay Area. And she's like, "This is it. We can retire. We don't have to work anymore. We can just live off the interest. Just sell it out." And he's like, "I understand what you're saying. I think there's more upside here. So let's make a compromise." And also, number two, there's capital gains tax. And so he says, "Honey, if we sell this, we're going to get crushed with tax." And so by the time that he met with her, the time that they compromised, and the time they had a plan to say, "Yes, we will sell if we can find a good capital gains tax exit plan," guess what happened? The $6.5 million dropped to, I think he said, around like $1 million or like 800,000. And now they're like crushed. They're like, "Oh my gosh," right? And this is before they met us, right? They're like, "Gosh," so now it's back to work. She's working 60-hour weeks. He's working 60-hour weeks. And basically, like, it's that, that pain of regret, like, "Gosh, I wish we would have just," at that point, obviously, just sell and pay the tax. Who cares, right? But fast forward, the market comes back, right? And it's part of what he thought it would come back to, because he said, like, long term, this is going to go even higher. And so they meet us, and at this point, the value is $9 million. Okay.
Nice.
So we get on the call now, and he's had the conviction and I guess the ice in his veins to hold back his wife, who's very upset from this wave, all the way back up past 6 million to 9 million. Down, and now it becomes, well, is this thing legit? Is it real? Can I trust it? Right? All of the questions that everyone's asking right now. He's asking the same thing. And he's not making quick decisions on this either. He takes about 3 to 5 months is kind of the process that he's going through here. Whoa. And his wife is like, "I'm in, let's do it." She's an attorney. She's like, she gets it, and he gets it too, but he's just being, extra cautious, if you will. Right. Guess what happens? That 9 million, it drops to like, I think it went down to like 3. So now it's just another swing of events. And they're like, "Oh my gosh." And so by the time they say yes, now the value has dropped. And in fact, let me actually back up there. It went from 9 to 12. By the time we met, I go to the Bay Area and I meet with them in person, and I sit down with them and I say, "Hey, how are you doing on value?" Because they want an ROI on their number. And I said, "Well, what's your valuation?" He opens his phone. He goes, and it went from 9 million like 2 weeks prior to like 13 million. And so it's about 13.5 million right now. I'm like, and she's like, "Let's go. Like, what are we waiting for?" So then it dropped. And I think at that point, oh gosh, I look at the charts again. It dropped significantly. And so he's upset. She's upset. And so finally he's like, "Okay, we're setting it at 3,000 a coin." When Ethereum hits 3,000 a coin again, that is our exit plan. So if you're thinking about all this right now, I would encourage you to have certain amounts that you've disciplined yourself to exit at certain targets. And so I'll never forget, I'm driving Eric to Walnut Creek from Sacramento. I was getting my insurance license at that point. I was giving referrals out, and people were like, "Get your insurance license." I'm like, "Okay." It's a Saturday morning, super early, and I get a call from my client. and his name is Peter. And Peter goes, Brett, where are you? And I'm like 20 minutes from your house, like, but I'm going kind of the other way. He's kind of this way to the Bay Area. And he goes, well, what are you doing? I'm like, what are you doing? It's like 7 a.m. He goes, I know it's really early. I'm like, yo, I'm just driving. I'm on my way to the. He's like, well, last night Ethereum just went over 3,000 a coin, and we'd like to exit 5 million like now. I'm like, whoa. I'm like, okay, well, I can't go to just a regular Wi-Fi because we want to make it secure, right? And so
Right.
literally it's like I feel like I had the launch codes. I pull over, I'm on my phone because I had everything set up. We had already pre-done like $100, to make sure everything would go through into the
Yep.
bank account. So everything was already
That's
mapped
wise.
out.
Yep.
And I get on the thing. I'm like, all right, you're gonna have to do it from your place because you have the secure Wi-Fi. And so I'm reading out the codes, and he's selling and exiting, 250,000 to start, a million, 250,000, and he's just doing it. And over the next hour, he exited 5 million. Some at 3,000 a coin, some at a little bit less, some at like 3,100 a coin, and
Sure.
basically an average 300 coins. So long story short, we exited at 3,000 a coin, the first 5 million, and that was the first DST deal ever done
Oh
with
yeah,
crypto. With
man.
crypto.
That was great timing too, because I think Ethereum topped out at 4 grand last bull cycle. So, well, I'm happy for that, gentleman. Is there anything else before we?
He went on, by the way, to exit at 4,000 a coin, another tranche of another 2.5 million, right? And on to that point as well, he also had money at Celsius, right? And he said
Did he
that
get
Brett
that
had
out?
me. Yeah, no, this is the point. We got out prior to all of that nonsense, right? All of that disaster.
Yeah.
So I want you to hear this. Like, the ability to use the DST is not just to defer the tax; it's actually to get yourself in a very secure, safe position. We call it the blue ocean, and or just the safe harbor, right? Where you can go into real estate, you can go into, I don't know, a lot of crypto folks aren't big on traditional banks, but we can sit in T-bills and wait for the market to shift and to crash. Crash maybe the real estate, crash maybe the stock market, crash maybe crypto. And the ability then to go back into prices at a low price is the value of the DST. It's optimal timing, exiting with conviction and going back with conviction when the prices are down. And so the Monday morning quarterback, Eric, is this. He sold, and he has. And by the way, he's been in like some stocks and some bank stuff. Like, he's kind of not really gone into real estate or crypto. And, he's just kind of been sitting pretty even at this point, waiting. But he could, at this point, take the 7.5 million, put it into an LLC, and go and invest with the trust at lower prices with the crypto, all tax deferred still. So it's kind of like he did a 1031 a little bit, like out of crypto into something else and move it into something else, all tax deferred within this ecosystem. Ride that wave back up and do it again with a new promissory note. And so it's understanding the tax flow, not just cash flow, understanding the tax flow, not just appreciation of assets. It's the movement, just like crypto teaches us, like the quickness and efficiency of movement. The DST gives you the quickness and efficiency of tax flow movement, right? Not having to be constrained by that capital gains tax. Takes a team. That's us. We're the team, right? We've already figured it out. We've already worked with Kraken for I don't know, it felt like 500 hours, but it's probably like 50 hours of legal and going back and forth and the KYC and all the documents. And we've already figured all that out, but it takes setting these things up early, having a plan, having the team, and then having a target and executing, right? So if anyone's listening, if you have $1 million net proceeds, $1 million gain, yes, we can help you. Yes, everything I'm saying works if you work and you get with this early so we can set it all up.
Neat. Do you have any experience with that, working with expats, not just Puerto Rico people, but people that have moved to other nations?
Yeah, we do have some clients that, they actually haven't done it yet. They've talked about it. We had one potential person who was going to use the trust. He was moving to Korea. It wasn't for crypto reasons. It was just, his wife was there and he had a big business in LA. He was just exiting on. But yeah, so not really any expats, although this works for those that are outside the US. And then we can move funds outside the taxable estate, which eliminates the 40% death tax. So yeah, but not really, Eric, for myself. Yeah, most of my clients are all US citizens. Yeah.
Yeah, no, fair enough. So that was this presentation was like outstanding. So much content. I think it'll be like an evergreen video because tax stuff doesn't change a whole lot from year to year. So I'm looking forward to have this in the library on the channel. Trying to think if there's anything else. Oh, yeah, you went over the cost, X60, expats. So go ahead and show your stuff, man. I know you got a YouTube channel and the book.
Yeah, here's the book. So you can take action right now by going to capitalgainstaxsolutions.com, and you can get our book, grab a book on Amazon, Building a Capital Gains Tax Exit Plan. We hit #1 bestseller. It's cool because we have Kevin
Good
Harrington from
job.
Shark. Thank you. Yeah, we have Kevin Harrington from Shark Tank in the book, and a number of other really smart, sophisticated real estate people. And I have a couple chapters too. They always say get in a room with really smart people, and that's all I've ever kind of done, Eric. And so I got in a book with some really smart people. So check out the book. And it's we think it's the proven playbook to unlocking your exit plan, really, when selling any asset of any kind. So check that out. We also have a free ebook on my website. We have an amazing YouTube channel with tons of free content, deal stories, client deal stories, success stories, breaking a lot of this down so you can get a ton of free content there. Just go to Capital Gains Tax Solutions on the YouTube channel. And then we also stream on Expert CRE Secrets, which is our commercial real estate arm of training and coaching people. We're experts in commercial real estate. This is how we got started. We 1031 exchanges. We still do that. But now we help any client who's exiting any asset of any kind really unlock whatever they want to invest into when they want to invest, all tax deferred.
Awesome. Thank you so much for joining us. This is very valuable. And we'll talk again. Brett,
Awesome.
thanks so much.